Hi, this is Joe Paulson with the AgView Pitch and the Weekly Market Outlook. Today we have Greg McBride from Allendale to help bring some clarity to the chaos we're experiencing. And so how's it going, Greg?
It's going. It was a very nice finish to the week after a USDA report that was pretty bearish on corn. So it wasn't, we saw new contract lows in corn. We thought the beans were going to go significantly lower, but we got a somewhat friendly report out of the USDA. So it helped. I think the biggest thing, as we go forward is just demand. The corn demand is phenomenal. The bean demand is lagging, and a lot of that is China and the trade war.
Oh yeah. No, it was definitely I think kind of a surprise for everybody. And um yeah, I mean it's been a bright spot on beans. I mean, hopefully as these beans continue to come up, it pulls, helps put a bottom in for corn, you know.
Yeah.
Um, so we've got the Pro Farmer Tour coming up next week, correct?
Yeah. Yeah,
And
absolutely.
and what are some of the things we should watch out for as they start making their way through their tour?
So they're gonna do two sides to this tour. They're gonna do the eastern leg, the western leg. They're gonna go through they'll go through Ohio, Indiana, Illinois, and on the eastern leg, and then they'll meet together in Minnesota. And then on the western leg, they'll do Nebraska. I think they get into I think they start in North Dakota, go to South Dakota, Nebraska, Iowa, and then they meet up in Minnesota. And I think the big thing that you'll watch for is the impact of some of these weather events that we've seen in the Western Belt, specifically in the Northern Plains. If you get into North Dakota, you had a tornado earlier this spring. You had a derecho that came through the northern part of North Dakota. Now, I don't think they'll actually get that far north. And then you had significantly heavy rains in a lot of areas up in that same region. So how much damage do they actually see there? Before all this, with North Dakota, you had a little bit of a derecho swing through parts of Nebraska, South Dakota, Minnesota, and northwestern Iowa. How much damage was there? And then the other one is, it's the same old fight that we have every year is when we have a crop out there that's whether it's good, bad, or indifferent, there's always going to be a contingent of pollination issues or disease or whatever it is, whether that's in the corn, whether that's in the beans,
Hmm.
problems that we have associated with the overall production phase. And so far this year, we've heard tar spot, we've heard southern rust, we've heard earworms, Japanese beetles. We have the tassel wrap issue with the Corteva genetics. We don't necessarily know exactly how widespread all of that is. Some people have said, "Oh, the Corteva thing is 30%." Some people have said, "Yeah, I've got that, and it's a nothing issue." Some of it is people getting out right in the middle or right in the heart of pollination and getting a little bit too amped up about something that maybe necessarily wasn't an issue. So there will be some issues. We know that here in Illinois, especially in our backyard and down to central Illinois, some of those areas had higher than normal overnight temperatures. We talk about that almost every year now. Oh, okay. Well, it never got cool enough in the overnight for everything to kind of calm down and all that stuff. So, do we see a little bit of a yield drag there? I still think this crop is huge. I don't think it's 188.8. I wouldn't be surprised if it ends up in January at like 184 to 186. But I sure as heck think that this report that we just got from the USDA for the WASDE in August here, I sure as heck think that might be the worst of the worst or the biggest, most bearish report that we get,
You
at
think
least for corn.
that'll be the high water mark for Probably
I
not.
believe so. And the acres thing is a little bit odd because that added so much more to the bearishness of the outlook of the report. The negativity in the report was compounded by adding 2 million acres of planted acres for corn after you just saw essentially like 500,000 lower on the June 30th report. And then your harvested acres go up by the 1.9 million acres. And I mean, so you're now talking about a record production, 97 point something million acres planted, 88 point something harvested. This is a 16 billion bushel production on also what looks like what maybe 8 or 9 or 10 bushels higher on our record yield. So, I mean,
Just a
it's
juggernaut.
it's just gigantic. And that was the kind of the thing after we got through that June 30th report. A lot of people were saying, well, when we get out and we can plant as fast as we do, we typically are going to add corn acres. We never got really far behind on planting. We actually got a little bit behind at the very beginning, and then we caught up and we stayed in step with what the 5-year average was. So by that logic, we should have seen higher plantings on the June 30th report. Well, they backtracked on it. So no, I don't think anybody was really looking for these adjustments that they made higher on corn acres and lower on bean acres on this report. So it kind of artificially threw things off that I don't necessarily say that the USDA is wrong on it, but it definitely was something that came out of left field.
And where did the majority of those acres come in at? Or was it widespread?
It was fairly widespread. A lot of it was out of the Western Belt. I know there were some guys in Minnesota or in Missouri that were complaining about the acres were way too high, all that stuff. I think where these numbers come in and where some of the disconnect comes in is when the USDA is trying to gather survey data. It's just like when Trump comes out and fires the Bureau of Labor Statistics because they've made revisions and stuff like that. Well, you're relying on survey data. Notoriously, farmers don't necessarily trust the USDA, so they either don't send back their surveys or they slowly send them back. So there's, oh, we've got to have it in 3 weeks. Yeah, I'll send it back in 5 weeks. So
Hmm.
then you get these revisions later on that kind of throw things off. We had the intention of planting more, and we do typically do that, but I think that was one of those big surprises. And as you start to go through and you start to see certified acres and you start to see prevent plant and all that stuff, maybe there's some adjustments later on, maybe on the September or the October report. But I think the groundwork has already been set. These are going to be pretty close to what we see for the final acres. They'll adjust a little bit, maybe 100,000, maybe 50,000 here or there, but it's not. Now that we've seen that big print, that's pretty much where it's going to be.
So we have had fairly decent demand on the corn side of things.
You're underselling it. You're way underselling it, Joe. We are selling the crap out of corn. And it's one of the this is one of the best things, and this is one of the best stories that we've had. This is as somebody that talks to producers on a regular basis, this is the one thing I actually get to talk about that's like so exciting to say why are we trading these prices? Well, we've got a big crop. Brazil had a record crop, but we are still selling the absolute shit out of corn. It's at this time of the year, we are not we are not necessarily locking in this much corn as we have the last year and then this year. So we're not only getting record sales for this time of the year, but it's being consistent all the way through the year. So we're this old crop that's going to finish out at the end of August. It's going to be a record export number, and I would think if this continues, we'll see another record for next year's or for the new crop side of things.
Mhm.
So it's great. It's
Yeah.
phenomenal.
Yeah. Beans have not been so great.
Not
Uh,
at all. Not at
so
all.
um it is when it comes to the bean export numbers and what the USDA is forecasting that China is going to purchase from us, w- we're can you talk to that a little bit about, is it realistic, the numbers that they have in there, or are we going to see them revise some of those numbers lower as far as how much we're going to actually be exporting?
Yeah, I think that I think they're overstating the bean export number so far. And if you go back to the first trade war, the first Trump administration, we had about 1.7 billion in exports for soybeans. That's overall. That's not just
Yep.
to China, that's overall. That's where we're sitting right now. And I think we're at a point where they're actually telling us that number is, I think that number is too high right now.
Mhm.
We already know that Brazil had a record crop. They had a record corn and bean crop. They had a record crop. They've got plenty to sell. They've got plenty to ship. We do have a little bit of a price advantage, but China's not picking that up right now, mainly because we're in this tariff situation. They're negotiating with us, or we're negotiating with them to get them to buy beans, whatever it is, but they're not doing it. So they're choosing to go to Brazil. They're choosing to go to Argentina. Argentina came back after like a 3-year drought. They're back up to about 50 million tons. But overall, these are two countries that we are in direct competition with that are not picking a fight with anybody. That it's plain and simple. That's it. They haven't picked a fight. They're just kind of staying neutral on it. Come buy our beans. Done. That's what China's doing. So, and I would think that at some point along the way, and maybe they will continue. We just saw them make a change. We just saw them make a change on this last USDA report with the export demand. They increased or they decreased exports by like 20 or 40 million bushels. They've got more to do. They probably got, 50 to 100, but that's not something that they're going to do this early in the year. The marketing season, the marketing year for this crop is just now going to start on September 1st. So they've got essentially a whole year to see if things change. So they can kind of slow play those adjustments. You might see 10, you might see 15. If things pick up, maybe they adjust them back in the opposite direction a little bit. But I think they're overstating for right now.
Okay. Well, let's switch gears a little bit towards the decisions that farmers have to make, and what kind of strategy we could possibly employ here. Um, you know, Basically, we've got to figure out, a farmer's got to ask himself, all right, what do I have storage for? Obviously, what do I need to take to town? The stuff that I take to town, am I selling it? Am I paying commercial storage on it? So I want to kind of walk through some of that. So um, first off, I've got I've got enough storage. I'm undersold. I'm just going to throw it in storage. Uh, what what kind of what kind of target orders do you think a guy should be putting in for our for the next bump that's realistic?
For corn, maybe 420 to 440.
Yeah.
Um, if we do something similar to last year where you see ending stocks and you see the yield start to decline a little bit as we go into harvest and as we get through harvest, um, the demand is good enough that that should help us to continue to see those numbers come down a little bit. Now we're talking about 2.1 billion in carryout, so we've got some work to do. Last year I think we were sitting about 2.1, 2 billion, 2.1, 2.2, and we brought it all the way down to 1.3 something. It took time, and we didn't necessarily see that market go flying higher. They just kind of subtly took it, and we went from like 385 at the lows, which would have been like next week at this time last year, and we took them back to about 445. So you get, 50, 60 cent move or something similar. Most of the heavy lifting on the next run up was all in the March. And by the time we got to the option expiration for the March contract, that was it. The
Yeah.
highs were in.
Yeah.
So I think in the short term, between now and say harvest, midway point in harvest, or maybe even closer to the end of harvest,
Mhm.
the upside in corn is going to be 420, 440. I do think you could make new contract lows one more time because, you're talking about what do guys do? Do they make space? Well, if you have leftover from last year, given what we know as far as what the USDA is telling us, you probably are not going to have enough storage to keep what's left over from last year and keep what's coming in this year. So
Mhm.
guys are clearing out the bins. This is what we saw last year. There's a little bit different situation even last year, where it was a lot worse, where producers were holding quite a bit more corn from the year before, and then they had to sell the heck out of it just to clear up space. I think you're seeing that again. The funds in 2004 in 2024, they stopped selling in early July. It was like the July 8th report or something like that. And so they took that short position, which was a record, and they started to gravitate higher. We didn't make that low in December corn until August 26th. So you had about 6 or 7 weeks of farmer selling that continued to push that market lower, even though the funds were sitting there just slowly buying back positions, slowly buying back positions. I think they moved about 100,000 positions from their record short out of that. And we still made new contract lows because the farmer had to sell it.
Mhm.
That's just nothing will stop a rally like farmer sales. So,
There's there's quite a bit of puking bushels onto the market right now. We're
yeah.
helping a neighbor execute that right now, and uh, we've all been there. It
Hmm.
sucks. Um, so uh, you know, my dad's a pretty sharp individual, and he kind of thinks outside the box once in a while, and all of his bushels go to the elevator. And the last few years, he's been having the elevator um, average those bushels out during the month of October. So his average somewhat mirrors what the harvest price option was for crop insurance.
Hmm.
And us with our tinfoil hats on and stuff, it seems like the last couple of years, October, the market did this, and then we came to October, and then she kind of did this, and then we got to November, and then it kind of dropped back off again. So, I mean, if you're wearing your tinfoil hat, watching October might be, you know,
We do things for a reason. You look at seasonals in these markets, and over the last 5 years, the seasonal low in December corn comes in around, say, August 22nd. The 15-year average comes in around September 27th. These markets start to rally as we're finishing out the crop and getting ready to harvest,
mhm.
or as we're getting into harvest. And there's no secret as to where your insurance levels come in at. If you set your insurance at 470 and you do math against that and you say, okay, what's 85% of that? Comes in at like 3.99 or $4.
Mhm.
We're sitting at $4 today.
Mhm.
So, or what was it? 405 was the close or something like that.
Yep.
But
Yep.
so that's the thing that everybody's watching for. And you say tinfoil hats, but it's true. Every producer knows they're not going to give you a chance to collect a check if they can help it, even if that means a subtle bounce in October to bring that average up above $4 or whatever that 85 or 80% or whatever insurance level is going to get you.
Oh yeah, 10, 15 cents can eliminate, 70% of the indemnities
Yeah.
that would be coming through. So,
Yeah. And there's so few that are doing the higher level 90% or any of that other stuff. So there might be some people that do get it, but when the bulk of your insurance level is 75 to 85, you're going to cancel out a ton.
oh yeah,
So,
big
and
time.
then on the bean side of things, though, I mean, the trouble we have with beans is that we're going to be headline driven. So you saw it on Sunday night that President Trump took to Truth Social and he said, China needs to buy quadruple the amount of beans that they're buying from the United States. Their stocks are getting low, blah, blah, blah. The market took off on that. They took that as a sign of we've got something brewing until we didn't. And we held firm that day. We got 20, I think 25 cents out of it on Monday. Report day came in. We had already given back 15 cents before the report came in. Well, report came in somewhat friendly and gave us a little bit of a bounce further. But overall, this is a market that without China, we probably have 950, 975 as our downside on beans. And with what we've got right now, even like I said, without China, this 1050-ish area on November beans is probably your upside max. Now, you go back a couple of months or a month and a half or so, and we made a rally back up to about 1075. Well, that essentially double topped the market, but that is also probably maybe the max as far as an over movement. But
Mhm.
beans like to go further than anybody thinks they should.
Oh yeah. Well, beans are seem to be extremely irrational when it comes to marketing them. They kind of seem to do their own things, and um, so all right. I don't have storage. I don't have it sold. I don't want to pay commercial storage, so I'm just gonna have them sell them at the end of the day as I bring them in.
Mhm.
Um, and if I'm somewhat bullish on some sort of price appreciation, what are a couple of different strategies that we could possibly use to take advantage of some upside without actually physically owning the stuff?
So buy some March or May calls. Like I said, last year, or well, I guess it was this past winter, you saw that market top out in late February. I have a feeling we'll kind of see something similar to that again, and this is on the corn side of things. So if I had to re-own it, I would re-own it out to March to give myself some time. I'd probably try and buy at the money calls at the time. You can you can probably buy a call and sell an out of the money call to try and make it a little bit less expensive.
Mhm.
If you, depending on how you feel about margin, you could buy a call and maybe sell a put underneath the market, try and get underneath contract lows and cheapen it up that way. That way there's no cap on the upside. Let's say, similar to last year, the market went a little bit higher than we thought it could in the winter. Let's say
Mhm.
that market goes back up to $5. But well, if we cap it at $5, what if it went further? That's kind of you have to kind of tailor these things to people's different risk tolerances. I
Mhm.
mean, you look at the thing that keeps me from getting bullish, and I want to be friendly. I want the market to go up. I mean, and
We all
who
do.
doesn't? Who doesn't, right?
Mhm.
The thing that makes me a little bit nervous about these markets and getting bullish at this time is if you look at the carry in the market, whether that's corn or beans, we are darn near full commercial carry right
Oh
now.
yeah.
That carry structure tells you a lot about the 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 mentality of the market. Either we've got a big crop, yeah, we do, or we've got a lack of demand, we do in the beans, or we've got, some combination of oversupply, which we do in corn. We have great demand, but we have an oversupply. So you're sitting in like 90, let's say 90 to 98% commercial carry for corn, and you're sitting at about 100 to 106% for beans. So you're actually more there, more than you probably should be. Doesn't mean they're wrong, just means that they've overplayed a little bit. You can do stuff with that where you try and capture carry through spreads and stuff like that. I try and keep those simple. I would say if I was doing anything, I'd more just try and stay to the calls. It's you're limited on your risk. You've already gotten your butt kicked this year if you haven't sold, and that's just how it is.
I've got my butt kicked on spreads this year.
Well, yes, but you know what I'm saying? Like the best, unfortunately, the best thing you could have done was to sell everything before you even planted a single seed this year.
Yeah, which isn't
So,
realistic.
you know, we did a meeting back in February. You were there, and your group, our group was saying, hey, you had to get at least to 1105 to make any kind of money on beans. We never got close.
No.
And corn, we were there for a month.
Hmm.
The best we did was get back to within a half cent of that level, and then it fell apart again. But the best thing we could have ever done, which no one knows this, is we could have come in and sold in February and been just stayed with it.
Yeah.
Nobody knows that. Everybody always, and we always think we're going to get a spring rally. We typically do. We just didn't get it this year.
Yeah, there is a hell of a carry in that bean market. I mean,
Yeah.
30, 30 plus cents to March is not nothing.
Well, and I'm not looking at it, but what's the carry in November to January, which is
November to January is exactly 20 cents,
for one
which is
month
for
or essentially one
essentially
contract.
1 month. Yeah.
Yeah.
No, that's
That
that's
makes
that's
no sense.
significant. Yeah.
So,
Well,
yeah.
which is you'd have to run the math on the interest. I mean, that's interest on beans is probably, I don't know, maybe 7, 8 cents.
Hmm.
So but for 1 month, I mean, if you could sell store for a month and deliver them in December,
Hmm.
which would be off the Jan, you could pick up that just for delaying basically a month's worth of time.
Right.
So,
Yeah, and I mean,
carry's something to look
you,
at.
you ask what you would do on the beans, and like I said, I don't have anything necessarily bullish to say. We're certainly less bearish after that report when, dropping 2.5 million acres, that really helped. But the demand side of things, the export side of things is rough. Now you got the NOPA crush report out today. That was bullish. Crush is still a phenomenal thing, but that bean oil story only takes you so far without actual raw bean demand. So
Mhm.
I think the thing I would look at on beans, if I was going to do anything, if I had to sell off the combine or I'd already sold some, you probably have to do like a long-term reownership on like maybe a May or a July call. And the reason I say that is because I want to give as much time as possible for the US to get their act together to get a deal done with China. If you go back to 2018-19 when we did the first trade war with them, we got a deal signed in 2020. It kind of came together in January of 2020, and then we signed it, I think, on I think it was Valentine's Day
Yeah.
in
Yep.
2020. Well, then we shut the world down for, a few months after that. And we never got around to actually doing the trade deal
Mm.
until later on. We got the phase one trade deal really started to kick up in the summer and fall of 2020. So we essentially went for just over 2 years with very minimal demand out of China. If you can get a trade deal done, let's say let's say it's November or something like that, you may get to not actually seeing that demand flow through until January, February. So I feel like you want to make sure you don't want to necessarily go to the March contract to do that reownership so that you can see the benefit of a trade deal. I think you'd want to go longer, maybe to the May or July. It's a tough situation because the time value means you're going to pay more, but it's also like, what do you do? You can't just sit on it because now all of a sudden if we don't do anything, well, you sold it
Yeah.
for a loss. Now okay, I guess we move on to the next crop.
What is the drawback to just other than a margin call, outright just buying July beans?
The futures? Yeah, no,
Yeah.
I mean, that's exactly what it is. It's the margin call.
Yeah.
And like I said, when we tailor these things to our customers, there are some people that have no problem with the margin call. There are some people that will avoid them like the plague. every single person is different, right, wrong, or indifferent. Some people don't mind it
Mm,
because when you buy or sell, when you buy beans at $10, if
mhm,
that goes to $11, you know you just made a full dollar on
mhm.
5,000 bushels or 10,000 or however many you did. Great. That's an easy number to get. Whereas if you buy a call that goes out to July and you buy a $10 call that you paid 40 cents for, well, you didn't start making money until you got to 1041.
Yeah, correct.
And
And
so if it goes to 11, hey, that's great. We picked up a dollar, but I only got 60 out of that dollar.
yeah, you're one for one when you actually do the actual futures. And that's always been the challenge with
Hmm.
doing options is, it's as soon as you buy that option, it's like an hourglass. I mean, the
Hmm.
sand's draining out of that thing right from the get. So,
Yep. And that's why sometimes it's easier a to do a hedge with a put because it's like, hey, I want to see this market go up. So if it goes up, I'm going to be happy because maybe I can sell that corn or beans or whatever
yep, whatever
for
the contract
for
is.
more. I may have spent 10 to 20 cents on a put. I'm willing to give that 10 to 20 cents. It's like having insurance on your truck.
Correct.
You just never use it.
Yeah.
But if the market falls off, I'm glad I had it.
I never thought about buying a put underneath that. That's not a bad idea if you're really that
So
worried about
that's
the
that's kind of how
downside.
it goes when it comes to a hedge. But on a reownership position, a lot of people, and this is why I say there's a risk tolerance difference here. But a lot of people, when you're already operating at a loss and you've had to sell cash at significantly lower than you want to, do you really want to have the risk of paying another 30, 40, 50 cents if the market continues to fall off after you've sold it?
It's
Or
such a it's such a catch 22
it
and
is.
we're not huge advocates of reownership because we are eternally long. We've got next year's crop to sell. We got all of that. However, um, you know, we've heard the term courage calls
Hmm.
that if it gives you the courage to sell your, 80% of your crop, knowing that you're gonna, or all of your crop, knowing that you're gonna have 20%, some sort of a re-ownership strategy that if the market does run, I am gonna get to take part in some of that appreciation.
Yeah, yep,
Um, so it's really personal
it
about,
is.
there's so much psychology to this whole entire market and what works for you, what works for the next
Mm.
guy. But there's 100 different ways to skin a cat.
There are, and one of the things that I've tried to do with some of my producers is we're not looking for the home runs.
Yeah.
It's so easy to put a position on and say, I want the next 5 cents or I want the next 10 cents or I'm not taking this thing off till I've made back 40 or 50 cents.
Mhm.
But if you look at the movement in these markets lately, and I was just talking about this in the office earlier, even though we're in downtrends, whether it's corn, whether it's beans, wheat, whatever, they have been very elastic. So you've seen the market go and make new contract lows, or you've seen it drop off, 30, 40 cents, and then it comes back. And then it gives you that false hope of, oh, this was the one, that was the low, we're coming back.
Mhm.
And then it falls back off again and goes retest the lows. This is why I hate trading wheat, is because wheat feels like they always want to be short, and they pretty much always are short. So any rally you get probably is a selling opportunity. But when you get into these long positions, if you get a profit, you have to be willing to maybe take a little bit less than what you're thinking because it doesn't necessarily mean that the market is going to go up forever. And we know that. I mean, we've seen markets where we finally get $6 and guys are saying, well, it's going to 7, or it goes to 7 and I'm not selling it before it gets to 8. It gets dangerous. It's one of those things. Well, wouldn't you rather have 20 cents in your pocket and the market does go up like you said, you're always long. There's always that next crop out there. Maybe that goes up and you accrue and you play the long game on it. You don't necessarily worry about, oh, I made 20 cents back here, but I gave up 40 cents as it kept going, but that next crop made 40 more cents,
Hmm.
maybe. So it's a
No,
tough situation. It's damned if you do, damned if you don't, because if you take a profit out of it, you have the opportunity for it to go back up or continue to go up. Or if you don't take your profit, the market goes right back down and retests the lows and you give it all back.
yeah, yeah. No, there's 100 different ways to do it and a lot to watch out for.
Mhm. Yeah.
Is there, before we wrap this up, Greg, is there anything else that I haven't asked you that you would like to share, or any words of wisdom here for the listeners?
Yeah, I feel like this is a very tough time of the year. We do typically put our lows in here, and the markets, a lot of times the markets, especially in July and August, as we're making either corn or beans,
Hmm.
the the days get heavy. You know, you guys are chomping at the bit. You probably have the combine out and you have it all ready to go anyway.
Grain carts are hooked up, all ready to go. Combines
So
getting close.
that's the thing is that, if you're wrong the market or you're behind on profitability, which a lot of people are at this time of the year, almost everybody is, it can get really daunting. And I hear it in our own office when the markets get slow or the markets get, to the point of weakness, everybody kind of clams up. Well, we need to talk to our producers. We need to know what's going on and we need to know where they're at. It doesn't necessarily mean that we're trying to be insensitive to all the chaos that you guys are dealing with out there. You know, we're trying to find out where you guys are at and what we can help with. So like that's where it's like we have to continue to talk to each other and we have to continue to find out what's going on. I mean, I've got some guys that I've talked to where, they everything sounds okay, and then you talk to them the next day, like, what's going on? We had hail come through last night. And it's I was like, oh Jesus, it's
I've been praying for 100% loss on hail all summer long, and it just hasn't happened.
I'm telling you, like you and I talked
I
before.
shouldn't laugh about that because there's people that have had that happen, and that sucks.
Well, it
But
is. I mean, I think I told you about the our branch office up in North Dakota sent me pictures of his crop, and it wasn't necessarily hail or the derecho was actually north of him. It was all just rain. The sheer amount of rain that they had. I mean, literally, here it is, middle of August, and they just had rain to the point of it was up above the ears on the corn stalks.
oh,
I mean, could you imagine walking out to your fields and seeing that type of stuff? And yet you get my dumbass calling you and saying, "Hey, how's it going?" It's like it could be better.
yeah, could be better. Could be
Could be a
better.
lot better. So, I mean, that's the thing. These times do tend to get a little bit heavy. I do feel like, especially on the corn side of things, and that's where a lot of this comes in at, is because we do produce that much more corn. I mean, we're talking basically a 3-to-1 production
Mhm.
over beans. The corn side of things does feel like it has a positive story buried underneath a mountain of corn. It's going to take time to get out from underneath it.
Mhm.
And so yes, we probably do have potentially new contract lows coming, but I think we're awful close to the bottom. So it's one of those like the darkest before the dawn type situations. The bean side of things, if we can get a deal done with China, I'm going to turn to be the biggest fan of the bean market ever. I just am not there yet. I don't
Yeah,
have the story because that demand is just not there. But like I said, the bean oil story is good, but it's only good to a certain point. And then we need beans to sell to China,
yeah,
essentially.
yeah.
So It's one of those things that we're at the dog days of summer where it's rough right now. It'll
Mm,
get better, but it's rough right now.
yep. Good parting words. Well, thanks a lot, Greg. I do
Yeah, you
appreciate
bet.
all your perspective here, and thanks everybody for tuning in, and we'll talk to you next week.